Hello everyone and welcome back to another market review. This is Silent. Today we're looking at the NASDAQ December contract for 2025. Today is Thursday and we're looking at the weekly chart to start off. If you remember from the previous video, we are monitoring the weekly wick constant encroachment to see if we could continue to stay above that 0.89 price level, and we did. We stayed above that range today. We've seen a continued rally above that price level, and we're beginning to settle above the previous week's high. Today we rallied up a little bit just on the open and then pulled back inside the range and settled off of the low, and we'll be dissecting that on lower time frames. As we drop down onto the daily chart, you could see that respect of our old high here at our daily rejection block. Price rallied up and closed pretty strong on yesterday's candle. Today we opened up, rallied slightly, put in one more high, and then pulled back inside the range. We came all the way down and tested the opening price of this down close candle here from 2 days ago, dropping down into that as a bullish order block, and we've pulled off the low so far that was created inside the daily candle. Going into tomorrow, my expectations are still bullish, so as long as we can open up and then begin delivering higher and utilize this wick as a discount array, so I would like it to stay in the upper half to the upper 25% of this down close candle wicks range on the new open and rally higher. If we fail to see any sensitivity inside this wick, I would expect for price to begin overlapping that range, and we'll be using today's low as a target for tomorrow, and then potentially back down and completely overlap this up close candle's range. So I'm giving a bullish expectation going into tomorrow to try and play the narrative of this being a bullish order block with this down close candle. Seeing price have a sensitivity inside the wick and rally higher would be my first expectation, but opening and rolling down through half of this wick would lead me to believe that a complete overlap of this wick would be necessary and a delivery below the low and then down to this low as a second scenario. The main thing that we will be paying attention to for tomorrow would be this wick to use as a barometer for higher or lower. On the 4-hour chart, I've brought the 4-hour SIBI that we were watching in the previous video over into today's price action. You can see how that down close range was overlapped in yesterday's price action, and we closed strongly at the highs, and then as we opened today, we rallied just a little bit and create a new high on the open, and then consolidation. After it begins breaking down here, we start to travel all the way back down into that higher time frame level and revisited that 4-hour SIBI. I'll be utilizing this up close range as a barometer going into tomorrow to see if there's an expansion through this range and a reclaiming effect to give us a new high, or if price leaves this up close candle, wicks above it slightly into that buy side imbalance here and then rolls back lower. And if that's the case, I'll be targeting the constant encroachment of this SIBI as my draw on liquidity. On the hourly chart, I've brought down that daily level and left the 4-hour level on the higher time frame, but I've refined that range down on the 1-hour chart with this buy side imbalance. I've also added this buy side imbalance here, and I've brought that through into today's price action. We can see how on the open we deliver into that range, price rallies going into midnight, and then respects this SIBI as a premium array. It runs into that bearish order block here and then drops lower while shifting to the downside, and it almost completely closes in that hourly buy side imbalance, but just gets wicks below the lows. Then it falls into consolidation. We attempt a rally here above the midnight opening price and it fails, and then redelivers through the low of that hourly buy side imbalance, closes strongly lower, and then redistributes to the downside inside this delivery here. So we drop down, rally, and close Then we open, we rally here, this will be a selling opportunity, and price drops lower, and it's heading down towards that daily order block. The main thing that you'll notice here is that there's no bodies that are able to close inside this range or even on top of that daily order block level. So the sensitivity here with just wicks and the delivery down to that daily order block level and rejection from it would give us the inclination to expect a deeper retracement, and that's what we got here. We got a strong delivery to the upside just on the close, and that gave us this delivery into the SIBI here, and then as you bring over the hourly buy side and balance, you can see how price just tagged into that right on the closing hour of the day. So going into tomorrow, we're in between a couple of levels here, and I'm not holding a hardline bias until one of these levels, gives away or begins drawing down or drawing up through the ranges in order for me to use them as a barometer and a level to capitalize on. So if we open and then begin delivering above this buy side and balance, I'll be using the idea of a reclaiming effect. So if we trade above here, I'll be looking to see if price can use this as a discount array in order to send price higher. Otherwise, I'll be keeping this in my mind as a premium array because we trade up into it right on the close, and then if it begins selling off and treats the low to the midpoint of that range as a premium array and starts trading lower, then our obvious draw on liquidity would be today's current low for tomorrow, and then as much as a delivery on these sell side below here after a complete closure of that hourly buy side and balance. On the 15-minute time frame, I've included yesterday and today's price action. If you remember from yesterday, we noted how there was such a strong delivery higher, and then going into today, it was pretty evident that a retracement to the downside would be due, just simply because there was such an unwillingness to see any higher prices or any bullish accumulation patterns. After we open at midnight and begin dropping lower, anytime we rally up, it's just redelivering into a bearish premium arrays and then consolidating in a bearish manner. It's accumulating shorts with these topping formations and these formations here during the consolidation. There's a high here, and this high between them is higher than both, so this becomes an intermediate term high. After this put in place, you could be going with the narrative of a higher time retracement and then start looking for shorts on the open of New York. We displace lower and then redeliver immediately all of that range in this one candle, and then trade lower and settle this candle as a doji. We trade up slightly on the very next candle and then sink it very heavily into Wednesday's lunch low. We trade back higher and delivering into this bearish fair value up here. We trade off of it and then come back in. Both of these redelivery into this range is a selling opportunity, and it drops us right into Wednesday's buy side and balance, which was the target I utilized for that second execution video. And after that target was hit, we did a reversal on the lower time frames, and it began retracing this drop from the morning session. We completely overlap all of that buy side liquidity that was engineered here on this run up. And on the 5-minute chart, take a note that 8:30 was our news. So as we open at midnight, we get that small little rally. Price pumps up one more time after putting this high and then begins breaking lower. After we shift under this low, this down closed range of price becomes a bearish breaker. So bringing those over in price with the sell side and balance overlap would be a selling opportunity. So these are short entries in this range. Price breaks down, leaves a SIBI, retrades into it, and then trades down into the low of the hourly buy side and balance before accumulating higher, and then price begins marking time throughout the London lunch. And finally, as we get into the pre-market of New York, we take out high one more time, run that buy side liquidity, and then begin breaking down. We shift under this low, and then time distortion. As we get into the New York Open, we purge these highs here and break down. Price leaves a small little imbalance here with this low. Price trades into both of those ranges and then breaks down pretty strong. No imbalances on this range, so we consolidate and accumulate shorts in this range before sending it lower down towards our daily order block and that Wednesday buy side imbalance. It misses it here, price retraces into this up close candle, drops lower, fails to deliver lower. We rally one more time, take out all that buy side liquidity here. People who are trying to catch shorts are taken out. Price reclaims these up close ranges as bearish order blocks and gives a selling opportunity on the lower time frames inside this price range. After we begin breaking lower here, there's selling opportunities at every retracement higher. Every time it pokes up into this up close buy side imbalance here, it's a selling opportunity because price has already overlapped it to the downside. So we're suspecting that this is a inversion fair value gap here. Price puts in one more up close candle and then it's off to the races. Retraces into this imbalance one more time and then breaks down finally and hits our targets. Before reversing, we come down and retest that higher time frame level again and shift structure to the upside. Price comes down and reaccumulates inside this down close candle and rallies with strength all throughout the end of the day and delivers into that hourly buy side imbalance one more time. On the 1 minute chart, there's nothing much more that I wanted to mention besides the first presentation fair value gaps and the morning session and the afternoon session. We saw both morning and afternoon offer a clear and clean entry. Anytime there's a retracement into this range could be a shorting opportunity. And then as we hit our target and go into the afternoon, every time price retraces into this first presentation fair value gap, it's a buying opportunity. And price delivers all throughout the end of the day. And then going into 4 o'clock, we consolidate and settle for the day. We almost retraded into the first presentation from the morning after delivering into the PM session first presentation fair value gap. So entering here and utilizing this as a target, it wouldn't have been met, but there's been a nice delivery to the upside for your objectives and a lot of buy side liquidity was taken out along the way. Both sessions today was very nice and clean if you're focusing on the first presentation fair value gaps. Alright guys, so that's going to be it for me today. Hopefully you learned something. If you found anything insightful, please let me know in the comments. And as always, don't forget to leave a like and subscribe. I'll see you all tomorrow.